We need to talk about the jobs number. How many jobs were created in the month of December? Talk about wages, the unemployment rate. We need to talk about Compass Real Estate Brokerage announcing another round of layoffs. Stitch Fix, job cuts, CEO stepping down. Constellation Brands with a negative pre-announcement. And folks, Tesla is cutting prices. Folks, this is your daily financial news for Friday, January 6th. Let's start with the jobs market. This was an important number. This was the number that I actually indicated that this comes in hot, really hot, could cause me to change my opinion about the next federal funds rate increase. So let's get into it. Expectations were 200,000. I actually called 187. And let's just say swing and a miss. Actually came in at 223,000. On a positive front, wage inflation took a step back. Not only did wage inflation come in at 0.3 with an expectation of 4.6, we actually had a negative revision to the previous month. So again, jobs are up, wages are up, but less up. And most importantly, probably unemployment went from 3.7 all the way back down to 3.5%. Folks, 3.5% is a 55-year low. So did I change my opinion about a potential rate increase on February 1st from 25 basis points to 50? The answer is no. The jobs number came in hot, but not super hot. And then most importantly, the wage number. The wage number actually is coming in. So again, I will stand by my call of 25 basis points on February 1st. Other things that came about on Friday, January 6th, Compass Real Estate has announced another round of layoffs. Folks, the housing market is in a depression. We are going to do about 4 million transactions this year, and a lot of these companies have a cost structure for 6.5 million. There is going to be pain felt. Fed President James Bullard says rates are getting close to being high enough. I agree. I think the Fed was setting us up for another quarter point in February, quarter point in March, and then they will be done. To that end, Neel Kashkari said not so fast. Neel Kashkari is coming out saying we may have to go as high as 5.4%. I believe what Neel is doing is really simple. He is trying to talk the market down. I do not believe the Fed really thinks they will go that high, but I appreciate him saying what he has to say. We've had some negative pre-announcements. Again, I highlighted this as a very good possibility, if not probable. Samsung with the big earnings pre-announcement. Profit sank to an 8-year low as demand for smartphones slumped. One has to ask yourself, if Samsung has such a negative pre-announcement, will Apple be next? We shall see. Stitch Fix, somebody who's been feeling a lot of trouble in this economy, announced another 20% cut in headcount, and their CEO is stepping down. Roku launching their television line. What the heck? Roku is going to produce televisions. That doesn't feel like a very wise use of capital to me, but hey, what do I know? Again, they are going to have a television line ranging from 24-inch TVs all the way up to 75. Constellation Brands is had to say they are going to have to raise prices because the supply chain for beer is still very inflationary and their earnings will be down. Dell Computers looks to be phasing out made in China chips by 2024. That is right around the corner. Short sellers made over $300 billion. It paid to be negative in 2022. $300 billion. Bank of America banker Rick Sherlund, sorry, probably butchered that, actually predicts a lot of tech optimism and comeback on earnings. He is bullish on software, to which I say, Rick, you are talking your book. I understand why you're doing, but dude, come on. You're talking your book. Tesla is cutting prices in China. 13 to 24%. I keep reminding you, Elon Musk, during one of his Twitter, I don't know, conference calls or whatever he does on Twitter, said that he is willing to sacrifice margin to sell units. So we already heard about Q4 units being down. How bad are earnings going to be? I think one needs to ask themselves. Leon Cooperman has said there's a 50% chance that the S&P 500 could see the low 3,000s. And then lastly, the December ISM PMI index came in sub 50. Why is that important? Anytime you are sub 50, it is recessionary, right? It is going backwards. Last month was 56.5, so it came in at 49.6. That is quite a drop for 1 month. So, folks, that's what I have you for the daily financial news for Friday, January 6th. Like, subscribe, comment, become part of One Rental at a Time. Have an amazing day.